And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It is a beautiful Monday, a little bit rainy. We're going to get into some Bitcoin price action. We're going to talk about the dollar and Ethereum and what's most likely to take place after tomorrow's CPI print. We'll go over some of the economic data and what to expect. That being said, let's jump right into it. Bitcoin still caught in a range on the 4-hour time frame, and as we've been saying over the past couple of days, a break of this range, which I would declare broken with a 4-hour closure above 17.3, gives us a next target of 17.668, and I believe that will probably lead on to the 2618 fib, which is coming in at about 18.3, and that would be kind of a retest of the prior months long consolidation. And yeah, we've been leaning a little bit more towards a bounce than not, but I would mediate that again with that 4-hour closure. Really, if you're conservative, above 17.4, very likely to kind of get that next move. And what else is happening? Stokes will cross up above 17,000 here in the next 15 minutes. Contracting volatility. Could we get a bounce to the top side of the range if we can't reclaim that purple 200? I think there's just more and more drives of hidden bearish divergence that are developing from this point right here on the 4-hour time frame. Not to say we can't come tap this liquidity right here in this zone one time and then come back down. But I want to kind of mediate what I've been talking about here with the 4-hour time frame. On the dollar, saying, hey, just like on Bitcoin, where you've got a slew of lower highs. You got lower highs. Well, here we got lower lows and higher lows. So you got the same divergence building up on the other side for the dollar, hidden bullish divergence, and we are saying more likely than not, the dollar is going to get a bounce up to this green box territory at coming in between 109 and 110. And basically our analysis is saying this: the dollar is still macro bullish. And on the weekly time frame, we're still making higher highs, potentially our first higher low in a long time. But we are looking at a long-term macro target for the dollar at about 122 to 128. And potentially higher from there next year. However, here's what we've been saying over the past couple of days: is likely to get a bounce up into this greenbacks. And then if we reject there, very likely going to come down to the $100 level, which is coming in right here. And why is that? Well, and this analysis would line up with an equity, either a bull market in the first quarter or a bear market rally in the first quarter, or even a Christmas rally if Fed Powell comes out dovish this week. So here's what I would say. Inflation expectations, which are coming out tomorrow. We've got the big numbers, the big ones coming out tomorrow. And that is going to be CPI and then the year-over-year inflation rate. And this is the one I watched the most. Last month was 7.7% national inflation rate year over year. And the consensus is that it's going to come down to 7.3. So remember, it's the expectation versus the reality. The expectation is 7.3. If we come out hotter than expected, anywhere 7.4 or higher, I would suspect that Powell has a more hawkish stance in the FOMC meeting the following day, and that would be bearish for markets going into the end of the year. Bearish for risk on assets. Vice versa. If we come out as expected or lower, it'll show what Powell is doing is working. Powell had the chance to be more dovish and say something like, hey, we may not put the terminal rate as high as we thought we were going to, or it may not have to be there for as high for as long as we expected. That would be a dovish Powell, kind of like we saw last week. And the market could really have that Christmas rally. On the other side of the fence, if inflation comes out anywhere higher than 7.3, again, And that lines up with the jobs numbers not coming out in Powell's favor last week, and the manufacturing numbers, were more inflationary, and the jobs numbers were not, unemployment didn't exactly go up, and non-farm payrolls, etc., were higher than expected. So that would, in my book, give Powell enough reasons to come out a little bit hawkish, tamp down inflation. Hey, look, we've already had a Christmas rally. We've already had people have the opportunity to sell the bear market rally here. I mean, would you call this a bear market rally off the NASDAQ? We're talking about 16%. Off the S&P, we had a 17%, and the Dow was the big one, kind of the outlier here. Somebody asked me this morning, why did the Dow really fly? 25% gainer. To answer the truth, I don't know, but I do know this. After breaking this channel, if we fall back into the channel, that's bad for Mr. Dow. And you can see the S&P and the NASDAQ are still in the falling channel, coming back from the highs in January. January this year, the peak of the stock market, not necessarily a bold claim now, but I do not think the stock market will make new all-time highs even next year. I don't think so. But again, if risk assets take a hit, you could expect Bitcoin and Ethereum to take a hit. And again, risk assets, if the dollar pops up here tomorrow or over the next week, daily Stokes are up. Weekly Stokes are nose diving down. We'll cross up the end of this week above 107.51. So that would be a good indicator that dollar's going to bounce here. If we do get a cross up on the Stokes, the 5-day is still pointed down. We'll cross up in another 5 days above 107.50. So that seems to be a big pivot on the market there. And that's personally how I'm kind of trading the market right now. I think short-term bounce. And then, we could get a move all the way down to that $100 mark, which is the pivot. Which did we get a tick below? I'm just going to, yes, we did get a tick below this, telling us that this month or going into next quarter, dollar likely to tag 101. And, I would give it a chance to bounce here first. So if the dollar is expected to play in that fashion, macro bullish, and again, I'm just going on a limb. I'm not rubbing a crystal ball here, but if we get the bounce up, equities likely, head back down to their lows and Bitcoin down to its lows. And then dollar down to that $100 target would line up with Bitcoin having and traditional markets having a bit of a rally going into next year. Now, where could rallies come as high? And I would say this trend line right here coming in at, that's only 19.3. Actually, I think a bear market rally, I was just talking to a friend of mine about this morning, a bear market rally could go much higher. And as long as and we did we technically confirm hidden bullish divergence coming back? Well, I know we did from this pivot right here. So there's multiple drives of hidden bullish divergence. How would we confirm this as a higher low? I'd want to see a weekly. Sorry, my graph's hard to see here. Really, we did take out this wick, almost a confirmed low, but technically speaking, based on the weekly time frame, if we do cross this back up and volatility expands, 1, 2, call it 3, 4, 5, I'd be looking for a move all the way up to 26.5. Potentially. If the dollar does get creamed and comes down to $100, I think we could potentially, that's a little aggressive, 26.5. But there's definitely a strong case for us coming back and testing this breakdown level at $31,000. It's not out of the cards. And I would still say, as long as we are really making lower highs below 30,000 bucks. Okay. To me, we're still in a macro downtrend. The environment hasn't changed enough. The Fed hasn't flipped enough. The inflation, the problems, the war, the energy crisis, potential housing crisis, potential crisis with the pension funds and the bonds and all that stuff in Europe and Japan next year. I very, very likely think that there's going to be a rush into dollars. Why? Because right now you can get a 2-year guaranteed almost 4.5% interest rate in the United States. Why would you go anywhere else? It's the safest money in the world. And if you're Japan or you're China or you're the UK and your currency is absolutely collapsing, Brazil's the only one holding it up here, actually. But I'm sure their collapse is not far behind. But the euro, this is the euro over the last year. The high back in April. Oh, that was 08. Euro never came back. This is the last year. So that is the euro, and this is the yen, even worse. And there's the British pound. So everything having a relief bounce here. The question is, do we get rejected here and come back down? Are you bullish or bearish on the dollar? What are your comments? What are your thoughts? Thank you guys for listening today. If you have any questions, but drop a comment in the comment section below. Are you bullish on the dollar or are you bearish? Let me know your thoughts, and we'll check in tomorrow after that CPI print at 5:30 tomorrow morning. I imagine a lot of volatility shaping up around this meeting. That's just what we've seen in past prior markets. And yeah, that is the hidden bullish divergence on the daily time frame. Technically, I'm looking for a move up there, and that, any kind of a daily closure really above 105 is probably good enough for me, or 106, I should say, and that dollar rally probably going to start. So we'll see what happens tomorrow and the day after that. Make sure you click the notification button so you can get our videos every day. We post something about crypto and what's going on with Bitcoin price action. I look forward to seeing you guys again soon. Take care.